Hello everybody, and thank you for tuning in to the We Love a Selfie webinar. So firstly, what I'd like to do is introduce myself. My name's Louise Apollonio. I'm the National Account Manager at the Mortgage Lender, and I am responsible for managing the relationship with the TMA Mortgage Club. So today what we're going to be doing is taking a look at Self-Employed, and we'll touch on some statistics within the market to show the growth that Self-Employed has seen over the last 10 to 15 years, and really how that can translate into opportunities for you as mortgage brokers, and also how you can help and understand the self-employed market and also understand lenders who can accommodate these types of mortgages. Just looking at the self-employed space, we've really seen a year-on-year increase in terms of private sector businesses. So 5.7 million private sector businesses at the start of 2017. This is an increase of 197,000 since 2016, which equates to over 2.2 million more than in 2000. Okay, small businesses accounting for 99.3% of all private sector businesses at the start of 2017. 99% were small or medium-sized SMEs. And that's really what we're seeing here in the market at the moment. There's lots and lots of new self-employed businesses that have started trading over the most recent years. A combined turnover for all SMEs was 1.9 trillion, which equated to 51% of all private sector turnover within the UK. So we've just taken a little look at the size of the self-employed market. So let's just take a little look at how that's represented or underrepresented within mortgages. So just over 4.8 million self-employed individuals within the UK, so around 15.1% of the working population. But when you actually look at that in conjunction with how many self-employed people are represented on mortgages, it's quite a different story. So in the second quarter of 2018, so looking back into last year, there was only 1 in 10 mortgages which had a self-employed person as the main borrower. So not really representing the 53% rise in self-employment since 2000 and also the overall working population. So how do self-employed clients feel about applying for a mortgage? So 71% of self-employed people, so 7 out of 10 people feeling that they would be discriminated against by mortgage lenders if they were to apply for a mortgage. So nearly 1 million, 20% think they'd actually be refused a mortgage if they applied just because they're self-employed. So 20% of people thinking that they would be treated differently to employed people just by applying for a mortgage and having all of their information viewed in a different way. 1 million self-employed people reconsidering their employment situation just because of the uncertainty of securing a mortgage, and that's something that we really need to start to address within the industry and ensure that self-employed clients know that they can come via advisors, come via lenders, and have their applications looked at in a way that we're not going to discriminate, we're not going to treat them differently, and we are going to be able to help with their mortgage application. Right, so let's take a look at a missed opportunity within the market. Over a quarter of self-employed homeowners said they would actually live in another property if they thought during the mortgage application process they would be treated the same as an employed person when looking at the affordability and actually applying for the mortgage. There's 27.1 million households within the UK. So how does that translate into the opportunity for you as advisors, us as mortgage lenders? That would actually create an extra 690,000 home movers. So 690,000 potential customers for yourselves out in the market as advisors, but also us as mortgage lenders as well. So general improvements, I think, really within the marketplace are required. You know, assessing affordability on income and work history rather than the employment status. So, you know, a lot of people are self-employed. They may have lots of experience within that field. You know, can we now start looking at potential experience before the self-employment and use that as some of the strength around the mortgage application and whether we can lend to these types of clients? Access to underwriters, I think it's really, really important that brokers, packagers, individuals even can talk through their case. So individual clients talking through cases with yourselves as advisors, but also being able to pick up the phone to our underwriters. So what's really important is that lenders are giving access to their clients, so advisors, in terms of picking up with those underwriters to discuss cases. Often these cases can be complex. There may be additional information that supports that particular application. So it's really important for the communication channels to be open at all levels. Okay, also options of integrating open banking into the application process as soon as that's practical. I know many lenders are moving into that space now and are looking to use the current technology to be able to do this, to be able to give faster decisions within the mortgage application process. And also the introduction of flexible products and just different criteria and innovations for self-employed people. So again, looking at different ways that the market can help this type of client with that self-employed income, and how we can show different products, different criteria around this. Right, what can be done now? Okay, so there are a small amount of lenders out there now in the market that will use the latest year's figures for affordability. So we at TML are one of those lenders. We will purely use those latest year's figures as the affordability for the loan. We will not average down based on previous year's figures, so using those latest year's figures that are presented to us. We will also accept people who have only been self-employed for 1 year. You know, we've talked earlier in the presentation around the increase in self-employment rise of 53% since 2000. So we can now look at those companies that are still within their infancy using those latest year's figures with 1 year's trading. Okay, so something that is actually quite unique to TML is the fact that for limited companies, we'll actually take the net profit before the tax is deducted, plus any salary that they've taken from that business. So that is the figure for limited companies that we are going to use on affordability. That, coupled with using the latest year's figures, really does have strength in our criteria and helps in terms of that affordability, because using that figure alone can make a massive difference to the maximum loan available to the clients. Okay, so what we're looking to do at TML is work with brokers like yourselves to really help this segment of the market. You know, we want to work with self-employed clients and ensure that they are able to obtain a mortgage. It doesn't matter if they've had fluctuating profits, because again, self-employed income doesn't always increase year on year. It can differ year on year quite significantly, and like I said, we will use those latest year's figures. So let's start to work to help self-employed applicants to get that mortgage, and in doing so we're going to help support the housing market, obviously self-employed clients, and also there should be an increase in new lending figures as we're helping more clients to achieve that mortgage. Okay, so just going to touch before we end the presentation on just a few case studies, I suppose, to put into context some of the things I've talked about over the last 10 minutes by some case studies that we've put together at TML. So these are cases that we've been able to help with in the past, particularly for self-employed clients. So this particular case study was a particularly difficult case. There was a marketing manager who was looking to buy her first property, only had accounts that dated back 1 year. There was a large income within that first year as well, so we were able to use the 1 year's accounts. Some lenders may not have been comfortable with that, but what we were able to do, or what our underwriters did, was look back on her track record within the industry, and we're able to rationale and factor that into the case essentially, and that resulted in a completion at 84% loan to value. So just looking at the second case study, this was a 30-year-old applicant. He'd actually employed his 34-year-old wife to help him basically run the business. They had a year's set of accounts, and again, due to his background, he has an ex-military background, it meant that he had the expertise, and those were in high demand. So we had no problem in terms of the income and the sustainability of that income, even though it was only based on 1 year's. And this particular application or applicants, they were able to borrow 580,000 at 77% loan to value, with just 1 year's set of accounts. And the final case study that I just wanted to touch on, so this was actually one of our more younger applicants, so a 23-year-old applicant based up in Glasgow. She had set up a business as a vlogger, and essentially was making a living and her money out of makeup and lifestyle vlogging over the internet. So again, an area that a lot of lenders maybe would have shied away from, because it's a sort of a different type of self-employment as well. But we were able to I suppose look at the income, ensure that it was sustainable, and we were able to offer her a loan of 240,000 on a 2-year fixed rate at 80% loan to value. So all of those 3 cases that I've just been through with you are live cases that are now completed with the mortgage lender. It's good to talk. Please feel free to pick up the phone to the guys at the mortgage help desk at TMA. They're more than happy to discuss cases with you and help with those inquiries, but also as well, you're more than welcome to come directly into the mortgage lender. So by picking up with myself or picking up with our sales hub at head office in Glasgow, you know, we really appreciate that self-employed cases aren't always straightforward, and sometimes it's just about talking through the case with somebody, giving out the key bits of information and getting that approval up front that it is something that potentially we can help with. So please feel free to get in touch. And finally, I'd just like to say thank you. You know, thank you for taking time out of your day to listen to this webinar. I do really appreciate you doing that. Hopefully you'll taken some points away that will help. And also, please just remember, get in touch with either the TMA Mortgage Help Desk or myself or our sales hub in Glasgow with any cases that you'd like to discuss. Thank you.